So you bought the S&P 500 tracker a few months ago. You saw on social media that this was the thing to do. You should be saving your money through investing. And suddenly, your 15% of your money has just gone. What to do next? Well, let me explain exactly what happens when a stock market goes through a panic. This is the fear index, right? This is telling you that when people have got positions and they just say, get me out, I can't take this pain anymore, I can't take the losses, or some of them are forced into it through their risk manager, they have to close their books. That happened at 11 p.m. on Sunday night. At this point, there's no buyers in the market. So when there's forced sellers and there's no buyers, then the market has to come down until it finds buyers. Because if you're a forced seller, you don't have the option to wait. The great option you have as a buyer at the moment is to sit back and watch what's going to happen. Now let's talk about stock prices. Stock prices, we know, are meant to reflect fundamentals. However, when those fundamentals are so uncertain with all these tariff talks and 50% headlines, you never know what tweet we're going to get next. That means the stock market becomes a place where buyer meets seller. And wherever those prices match, that is the price of your stocks. All the prices of the stocks together in the S&P 500 give you your price on the screen and how much money you've lost. When fear starts to come down again, like it did yesterday, like it has done this morning, Tuesday the 8th of April, then you start to see logic come back in. You start to see buyers come into the market because this was the panic. This was cutting the books. The books have been cut. The positions have been flushed out. If you were a seller and you've been forced out, that's already gone. This is why we get a drop in this fear index and we're back to kind of logical terms. So even if things do get worse from here, you might not see stocks go back to the lows that they were because it's a more orderly market and buyers can meet sellers at normal prices, not in the panic zone where forced sellers are pushing the price down until they find any buyer that's out there.